Welcome to the channel. I trust that you're doing well. In this video, I'm going to do a step-by-step beginner tutorial on how to trade crypto futures on the Bitget exchange. Bitget is a US friendly exchange, so you don't need a VPN and you don't even need to do KYC when using Bitget, at least at the time of recording. In this video, I'll show you how to deposit some crypto, where to go if you need to buy some crypto using fiat. From there, I'll show you how to transfer your crypto from your spot account into your futures account. Then I'll get you familiar with the user interface where I'll show you how to go long and short using limit orders, market orders, and how to set some stop losses. All of that and more with some tips and tricks along the way. If this is your first time signing up on Bitget, I've left a link for you in the description down below, as well as in the pinned comment. Sign up using that link to be eligible for some very competitive sign-up bonuses. At the time of recording, you can get up to $8,000 as a sign-up bonus. The promotion might be a little bit different by the time you're watching this video, but when you sign up with the link down below, you'll be able to see the promotion that is available to you. I've also left timestamps for this tutorial in the description of this video down below, so feel free to skip ahead to a section that might be most relevant to you. If you get some value out of the video, don't forget to leave a like and hit subscribe. I have plenty more Bitget tutorials on my YouTube channel. If you need to sign up, now's a good time to pause the video, get signed up, and I'll see you inside the exchange. Before we get moving along with this tutorial, I'm going to show you how to toggle Bitget between light mode and dark mode. To do that, just come up here to the top right hand side of the screen. You'll see this little sun icon here. If I click on that, this turns things into light mode. But if you like dark mode like me, you can click right here where the moon is. And now we have dark mode. And I'll be using dark mode for the duration of this tutorial. First, I'll show you where to go to buy crypto using fiat and how to deposit crypto to Bitget. If you're already familiar with this process, feel free to skip ahead a little bit in this tutorial or use the timestamps in the description down below to skip ahead to a section that might be most relevant to you. To buy some crypto using fiat, just head up here to the top left-hand side of the screen and hover over Buy Crypto. You'll notice in this drop-down menu that they do have P2P trading available, but they also have an express option available down here, which uses third-party payment providers. If we give that a click, it'll take us over to an order form, and here's where you'll find 3 third-party service providers, at least at the time of recording. These service providers are quite common, and they're perfectly fine, as I do see them on plenty of exchanges. What I can say, though, is if you're going to be using any of these, you will have to sign up with that service provider and go through the KYC process. I also find that the fees are a little bit on the high side when using these as well. For example, if you were going to purchase crypto using fiat through one of these service providers, you'd come up here and you'd type in the amount you wish to spend. So we could do something like this. Right over here, you can see that this is currently set to Bitcoin, but if I give this a click, you can see that you can also do Tether as well as USDC. So I'll just go ahead and click on Tether. Now over here under order details, you can see for the $200 purchase that we're actually receiving $192 worth of Tether. So pretty much an $8 fee for this purchase, which I do find on the high side of things. And that certainly adds up the bigger your order gets. You can also explore the other payment providers down below. So if we click on this one, you can see that 192 Tether is what you'll be receiving for the same purchase. And if we check this one down here, you can see that you're only receiving 188 Tether. And these do change around quite frequently. So you're going to want to pick a service provider that works best for you, and that's going to give you the best value for your buck. If you're okay with the order details, you just come down here, click on Next to proceed to complete this purchase. I imagine over time that Bitget will be adding more fiat payment methods. So depending on when you're watching this video and where you're located in the world, you might actually have more options available to you at that time. Once you've purchased your cryptocurrency, it's going to be in your spot wallet. So to get there, we'll come up over here under Assets, and then we'll select Assets again from this drop-down menu. And this will bring you over to your Assets page. And here's where you'll find your coins that you purchased with fiat. If you're simply looking to deposit some crypto to Bitget from another exchange or from a hardware wallet, you'll notice over here on the right-hand side that each one of these cryptocurrencies has a deposit address. Alternatively, you'll also find a deposit address up here near the top right of the screen. So option 1, you can select the cryptocurrency you wish to make a deposit and click on its deposit button, or you can click on this deposit button here, and I'll go ahead and do that for this tutorial. This brings us over to the deposit order form, and you can see that it's currently set to Bitcoin. But if we click here, we can select a different cryptocurrency that we wish to deposit from this drop-down menu. I'll just go ahead and leave this on Bitcoin for a moment here. Down below that, you'll have to select the chain type. So if I give this a click, you'll get a little pop-up window where you can select the chain type. We're just using Bitcoin here, so that's pretty straightforward. But if you were using a coin like Tether, so let's go ahead and select Tether from this drop-down menu. Now I'm going to click on chain name. You'll notice that there's a few different options for Tether. Some people will use the Tron network to save on fees, but the main point here is you want to make sure that the chain type matches on both ends of this transaction. You don't want to be sending from the TRX chain to the ETH chain. If the chain types don't match, you can lose your coins forever and there's no getting them back. So I'm just going to go ahead and close this out. Let's go back to Bitcoin here, and then I'll go ahead and select the Bitcoin chain. Now Bitget's going to generate your deposit address, which will be found right down here. And you can simply copy it by clicking right here, or if you hover over this, you'll be able to see your QR code. So if you're sending coins in from a smartphone, you could just simply scan your QR code. Once your coins arrive, they'll be in your spot wallet. So if we come back over here and click on assets, here's where you'll find your coins once you make a deposit. To trade the futures markets on Bitget, you'll have to transfer your funds from the spot account into your futures account. This transfer is done internally through Bitget, so there is no fees to do this. You'll notice over here on the right-hand side that some of these cryptocurrencies have a transfer button. Alternatively, you'll see at the top right-hand side of the screen that there's also a transfer button up here. So I'll go ahead and just use that for this demonstration. And here's where we can transfer funds from our spot account into our futures account. You'll see right up here that we're currently set to BTC, but in my case here, I don't have any Bitcoin on Bitget, so I'm going to select Tether. Now we're set to transfer Tether from the spot account into the USDT margin account. From here, all we need to do is put in an amount of Tether that we wish to transfer. You'll be able to view your available balance just down below, or you could just simply click on all, confirm, and now we've transferred that Tether from the spot account in the USDT margin account. If we come back up here to assets and give that a click, and then come over here to futures and give that a click, you can see the Tether down here in the futures account. Now that we have some Tether in our futures account, we're ready to play some trades. To find the futures markets, you just come up here to the top of the screen and hover over futures. And in this drop-down menu is where you'll find the different futures markets. You'll see at the top here, the USDT margin futures. All profits and losses using these pairings will be settled in Tether. This also means you'll have to send Tether into your futures account. Below that, you have the USDC futures, similar to Tether, but all profits and losses are settled in USDC, and you'll also have to send USDC into your USDC futures account. Down below that, we have the coin margin futures. All profits and losses are settled in the underlying asset. You'll also need to fund your futures account with the asset that you intend to trade. So if you were going to do Bitcoin coin margin futures, you'd have to transfer Bitcoin from your spot wallet to your futures wallet. Typically, I only use these pairings when the market is generally bullish over the macro. That way, when I settle my profits, I still remain exposed to the asset as the asset generally increases in value. But when we're under bearish conditions like crypto's been in for a little while at the time of recording, I'll typically opt for either USDT futures or I'll go for the USDC futures. That way, all profits and losses get settled in a stable coin and I'm not exposed to the asset as it generally decreases in value. So for this demonstration, I'll go ahead and use the Tether pairings here. So I'll give that a click. And here's the user interface where all the trading happens. Up at the top, you'll find all your different pairings. Just simply click on the pairing that you wish to trade. So if you wanted data, give it a click. Cardano, easy as that. I'll just go ahead and leave this on Bitcoin for this demonstration. Once you've selected your pairing, you can minimize them by coming right here. You'll see a little arrow, give that a click, and that gets the pairings out of the way. And right here we have our price action chart, which is showing us the historical price action of the asset on a selected time frame. You'll notice in my case here that I'm currently set to a daily time frame, which means each one of these candlesticks represents a day's worth of time. You'll notice if I hover over the daily here that it becomes a drop-down menu. You can come down and click on hourly if you want to select an hourly time frame. And if you want to add any of these time frames as a favorite, you just come down to the time frame that you like and check this star. Now, if I close this out, you'll notice that I added the 4-hour time frame to the top of the chart. Now each one of these candlesticks represents 4 hours of time. This chart is powered by TradingView, so you'll have access to some basic drawing tools as well as some basic indicators. You'll find your drawing tools over here on the left-hand side, and if yours aren't showing, there's a little tiny arrow at the bottom left-hand side. If you click on that, you can hide the drawing tools or you can expand it into the drawing tools menu. Beside each one of these icons is a tiny little arrow. If you give that a click, it expands into a drop-down menu where you can access some more drawing tools. If you're looking to add an indicator to this chart, you just come right here onto this icon, give it a click, and here's where you can find some really basic indicators. If there's anything that you're looking for in particular, you could just type it in right here. So if we wanted an RSI, I could type that in, click on Relative Strength Index. I'll go ahead and close this out. Now you can see we've added the RSI to the bottom of the chart. If we want to get rid of it, we just come over here, click this X, and it's gone. When it comes to technical analysis, I just simply use TradingView directly. So I'll go ahead and drag it into frame like so. This way, I have more access to data, more indicators, and even different markets. You've likely noticed that a lot of cryptocurrency exchanges charting systems are literally powered by TradingView. TradingView is free to try, and there's also a free basic version of TradingView that you can use. So I'm going to leave a link for TradingView in the description of this video, as well as in the pinned comment down below. I also have a step-by-step beginner tutorial on how to set up and use TradingView for anyone that might find that helpful. So I'll leave a link for that as well. Those resources can be found in the description of this video, as well as in the pinned comment. So I'm just going to go ahead and get it out of the way like so. And while we're still in this chart here, I'm just going to clean this up a little bit for this tutorial. So I'm going to go ahead and hide these moving averages. I'm just going to click the eye icon here like so. And I'm going to get rid of these grid lines. I don't like the look of that. So we're going to go to settings. Then I'm going to come to the vertical grid lines right here. Let's get rid of the opacity on that one. And then we'll come back to settings here. Let's get rid of these ones like so. Close this out. Much better. Right next to the chart, we have the order book. And the order book is showing us where market participants are interested in buying and selling. These market participants are called market makers. And this is because they're providing liquidity to the order book by executing limit orders. When a trader executes a limit order, the order is placed on this order book for all to see. On the top side of the order book, we have what's known as the asks. And these are the price points that market participants have placed their sell orders at. Down below, we have all the bids. These are the price points that market makers have placed their buy orders at. In the price column of the order book, we can see the price point that these orders are placed at. In the middle, we can see the amount in BTC placed at that price point. And then on the far right-hand side, we can see the sum in BTC. This price right here is where the asset is currently trading at. So all the asks will be greater than this price here, and all the bids will be less than this price right here. When a trader comes along and executes a market order, they're matched up with the best available price from the order book. That trade executes and then is viewable under market trades on this tab right here. Here's where we can see trades being executed in real time. And as you can see, a bunch of buy orders just came in here, one sell order there. And this panel can get quite active during volatile market conditions. In the middle column of this panel, we're looking at the price point that these successful trades were executed at. In the amount column, we're seeing the amount of the asset traded at that price level. Next to that, we have the order panel where we can go long or short on an asset using limit orders, market orders. We can set trailing stop losses as well as trigger orders. And I'll be demonstrating some order types here shortly. And at the top of the order panel, we have our margin mode. And as you can see, we're currently set to cross margin at 20x leverage. In my opinion, this is extremely high leverage. I wouldn't recommend going over 3 to 5x leverage. Of course, not financial advice, as I'm not a financial advisor. However, I think that this is where a lot of people that are aspiring to be traders become simply gamblers. You're already taking on a lot of risk by trading inside these markets. By adding 20x leverage to these trades can wipe you out faster than a fart in a hurricane. Now, that's not to say that there aren't people that are successful trading with higher amounts of leverage, but those folks likely have a very optimized trading strategy that they've back tested for that kind of conditions. For the average person, this is probably going to wipe them right out, especially on cross. More on leverage here shortly. In a nutshell, cross margin mode is going to use your entire account balance as collateral for your position. I will use cross margin once in a while, but not without proper risk management. If you end up getting liquidated by using cross margin, you're going to have your entire account wiped out. A lot of traders will simply toggle from cross margin into isolated margin. And in order to do that, you just simply click right here where it says cross. You'll get a pop-up window, and here's where you can toggle from cross into isolated. Then we just simply click on confirm. Now we're set to isolated margin mode. Now, as you can see, we're on long 20x and short 20x. So let's go ahead and change those. So I'm going to go ahead and click where it says long 20x. We can type in a custom amount of leverage right here. So we could do 5x, but you could also use this slider bar if you want as well. But we'll just go ahead and actually knock this back to 3, confirm. Now we'll come over to the short side, click on that, and let's get that down to 3 as well, and click confirm. Isolated margin mode is the amount of leverage applied to a specific position. So unlike cross margin, where your whole account balance is collateral for the position, only what you put into this trade is going to be the collateral for that position. So if you get liquidated, you're only going to lose what you put into that trade versus your entire account balance. As an example, if I was to put 100 tether into a trade on isolated leverage of 3x, my order value is going to be 300 tether. If this was 5x leverage, my 100 tether would have an order value of 500 tether. Now, the benefit to this is obviously that can maximize my gains, but it can also free up the remainder of my capital to be deployed into other positions. To the inverse of that, this also has the potential to maximize my losses or get my entire position liquidated, especially if I don't have proper risk management in place, such as a stop loss. So a couple good considerations when choosing your margin. And just before I demonstrate some trades, I'd like to draw your attention over here to the current funding rate. You can see right now that there's a positive funding rate here of 0.01%. You'll also notice a countdown timer that's letting us know how close we are to the next funding period. Whenever you see a positive funding rate here, this means people who are holding long positions are paying that funding rate to people who are holding short positions. If you ever see a negative funding rate, that means people who are holding short positions are paying the funding rate to those that are holding long positions. So it is worthwhile to pay attention to this, especially if you're holding larger position sizes, as this can begin to eat into your profits. And first up, we have a limit order. And a limit order is going to allow you to be more strategic by choosing a price point that you wish to either go long or go short. You'll also pay a smaller fee for using a limit order, and that's because you're placing the order onto the order book for all to see. Typically, exchanges like to incentivize traders to provide liquidity to the book, and they normally do this by charging a smaller fee for using limit orders versus executing a market order. More on fees shortly. The first thing we need to do is make sure the order panel is set to limit, and now let's head on over here to the chart. Now let's imagine that we're hunting for a good long entry. We can see in the last several weeks that Bitcoin has been in a little bit of a bear market rally. We can see a higher low just barely printed on price action here as opposed to back here. That led to an obvious higher high as opposed to this pivot here. Then that gave us our next obvious pivot point here, which was a higher low as opposed to back here. And recently we do see Bitcoin rolling over, and it is testing this last known obvious pivot point in the bear market rally. So maybe we're thinking to ourselves, you know what? If Bitcoin starts to close below this pivot here, it's likely going to flush out and test the bottom side of the range. Maybe that's where we want to try to place a long order. So what we can do is we can come over here to the drawing tools. Let's go ahead and grab a horizontal here. And let's just imagine that we're viewing this area right around here as support. We can see that there's a couple candle bodies in that level here. We can see several wicks testing that level here. So maybe we want to try to place an order there to go long. On the y-axis of the chart, we can see that there's a price point correlated to that horizontal coming in at 18,839. So let's come over here to the order panel and let's go ahead and type that into price, 18,839. Next, we need to choose how big our position is going to be. So if we come down here to the amount box, you can see that this is currently set to BTC. Now, when I'm trading the tether pairings, what I like to do is I like to click right here where it says BTC. You'll get a little pop-up window. You'll see there's a couple other options here. You can do cost value as well as nominal value. Typically, I like to just simply use cost value. So I'm going to go ahead and give that a click. Click on confirm. Now, when we head back to the order panel, you can see that I've toggled this from BTC to USDT. Now we can type in the amount of tether that we want to put into this position. And of course, we can see our available balance near the top of the order panel right here. So we know exactly what we're working with. Another way to do this is by using this slider bar right here. If we were to slide this up to 25%, what this is going to do is it's going to allocate 25% of our available balance into that order. But for this demonstration, I will just simply go with a custom amount. So let's just go 100 tether. Once you have this set up the way that you want it, you'd simply click on buy long. Then you're going to get a little pop-up window where you can confirm the details of your order. Of course, we see we're set to 3x leverage. We can see our open price, so this is where we've placed our order at $18,839. We can see the current price of the asset trading at $21,553. Just below that, we can see the amount of our order size quoted in BTC. And down here, you'll see your liquidation price. So if this order was to fill and price was to reach $12,617, this entire position would get liquidated. I never let my positions come anywhere near that. It is always a good idea to manage your risk by using a stop loss well before your liquidation is ever hit. Now, a quick tip with this: the more leverage that you use on a position, the closer your liquidation price is going to be to your entry price. So that's another consideration when choosing your leverage. If everything checks out here, you'd simply hit confirm. Now we've placed that order onto the order book. If price action begins to retrace and hits this level down here, our order will be filled into a long position. We can also see this order on the chart itself. If I go ahead and just get rid of this horizontal like so. Now we can see the order on the chart itself. You can see if we want to amend it, we can just simply move it around. So if we wanted to move it up a little bit higher like so, we could do something like that. We're getting a little notice here that we're amending the order. We'd click on confirm. Now you can see that I just amended that order to 19,141. If at any point you want to cancel this order, you can actually just click this little X inside this box right here. You can also see your open order down here. So you can see that we're currently set to a position tab, but you can click right here where it says open orders. And here's where you can find your order. Of course, the status of this order is unexecuted because we're waiting for price action to get down to that level. We can also cancel the order from here by coming over here underneath operation and clicking on cancel. Now I've successfully removed that order from the order book. Of course, we can use limit orders to put on short positions as well. So I'll quickly demonstrate that, but this time I'm going to show you how to set a take profit and stop loss when placing this order onto the order book. So the first thing we need to do is find an area where we want to place our short order at. If we look left on the chart, we can see that there's some temporary price action right back here, was serving as support for a short time before it eventually broke to the downside, sending Bitcoin down to Goblin Town. So maybe that's where we want to place our short order. So let's go ahead and grab a horizontal here from the drawing tools. And I'm going to go ahead and just mark this area right here. Perhaps that's an appropriate area to place a short order. Of course, on the y-axis of the chart, we see a price point correlating to that horizontal, coming in at 28,630. So let's head back to the order panel and let's go ahead and type that into price. 28,630. Next, we'll choose the size of our position. I'll just do the same thing as last time. I'll go 100. Now we're going to check this box right here. Take profit, stop loss. Just for fun, let's imagine that we're targeting down here if our order is to fill. So I'll go ahead and mark that on the chart. That's coming in at 18,760. So let's type that into take profit, 18,760. 69, good number. And now we need to choose a stop loss. Let's just imagine that we want to put our stop loss maybe somewhere just above this pivot point, right back in this area right here. Maybe we think if price action gets up above that level, we want to get the heck out of the way because perhaps it's most probable at that point in time that price just continues to the upside. So of course we can see that pivot marked out at 32,104 on the y-axis of the chart. So let's go ahead and just put in a price point slightly higher than that under stop loss. Let's go 32,000, maybe 350, something like that for this demonstration. Once we have things configured the way that we want it, we click on sell short. Now we're getting our little pop-up window here confirming the details of our order. If everything checks out here, we click on confirm. Now we've placed that order onto the order book. So if price action pops up and hits our order right here, we're going to be entered short, but Bitget is going to add our stop loss as well as our take profit. Of course, we're looking for price to move back down to this level here and hit our target. But if price action just continues from this level here, we'll be stopped out slightly above this horizontal here. If we want to cancel that order, we just come over here and we click this little X inside this box and we've canceled the order. So on the plus side of a limit order, you will save a little bit in fees. And with a little bit of patience and some good technical analysis, you can often get better entries on your positions as well. But there are some considerations when using limit orders. For example, in our buying scenario, maybe price action doesn't come down to our order price. Maybe it just carries on from here to the upside and our order never fills. Or perhaps price action does come down to our order, fills it, and then continues to the downside, putting us at a loss. And that's why it's a good idea to always be exercising proper risk management by using a stop loss. In our sell scenario, maybe price action does float to the upside, but doesn't quite get to our order. rolls over, moves to the downside, and of course our order wouldn't fill. Or perhaps it gets up, tags us in, and then carries on to the upside, but at least we'd have our stop loss set up in this level here. So a couple little considerations when using limit orders. Next up, we have market orders. To execute a market order, we'll come back to our order panel. We'll just simply toggle over to market. Market orders are very easy to place. They're going to execute immediately at the best available price from the order book, but there are a couple things to know about market orders before using them. The first thing is that you will pay a higher fee for using a market order. This is because you'll be removing liquidity from the order book versus adding to the order book with a limit order. This makes you a market taker, and because of this, you'll be paying a higher fee. The next thing to be aware of is what's known as slippage. We all know that cryptocurrency can get moving very quickly, whether that's to the upside or the downside. If price action begins to melt to the upside, it's going to be chewing up all the orders on the ask side of the order book really fast. If it begins to waterfall to the downside, the inverse is true. It'll be eating up all the bids on the order book very quickly. Remember, a market order will fill at the best available price. So if price action is really volatile, you might not get the price point you intended. This means that your position could be starting out at a slight loss. Slippage can also occur if you're trading with large sums of money. For example, if you did a market order of $1 million on an altcoin with a thin order book. You yourself will be chewing up that order book, and this is going to change your average entry price. Typically, slippage is less pronounced on assets with thicker order books like Bitcoin and Ethereum, for example, and if the market isn't very volatile. Certainly things worth considering before aping in with a market order. Aside from that, placing a market order is nice and simple. Simply choose if you're going to be buying long or selling short. Put in the value of the order you wish to execute, so I'll just go ahead and do 10 tether and I'll go ahead and buy long. Confirm the details. And there you go. I've just entered that position at the best available price from the order book. And now we can see that position on the chart right here where we entered it at. And then down here on the positions tab is where we can find the details of that open position. Right over here is where you'll find your unrealized P&L. You'll see your ROE just below that, and margin ratios found just below that. There are a few ways to close an open position. So the first one is to simply set a take profit. You can do that down here on your positions tab on your open position. Over here on the right hand side, click on take profit. Quickly give this little notice a read through here. Click on I understand. And in this box here, we can type in the price point that we're targeting. So for the purposes of demonstration, let's just imagine we're targeting 28,000. Then down here, we choose the amount we're taking profit with. So for this demonstration, I'll just do 100%. And then click on confirm. We'll get our little pop-up confirmation window here. If all looks good, you'd click on confirm. Now you can see on the chart that we've added a take profit. So if price action is to shoot up and hit that level, we'll be closing in profit up at 28,000. If we want to cancel that take profit, we'd come over here, click on this little X inside that box, and we've canceled that order. If you want to get out of your position immediately, what you can do is you can come down here and simply click on flash close, confirm. And now we just closed that position at the best available price from the order book. Bitget also has this really cool feature called reversal. So if you were to come down here and click on reversal, what this is going to do is it's going to close your current position and then it's going to open you short with the same position size. So if we give this a click on understand, confirm. Now we closed that long and open short. And you can see that just over here. So there's a few ways that you can close your open positions. You can find all the trading fees on Bitget if you come right down here to the bottom of the page. Come over here and click on fee schedule. And here's where you can find the fees. So if you click on spot trading, now we can see the spot trading fees. So we have a maker fee of 0.1%, and that's if you're going to be using limit orders. And the taker fee here is the same at 0.1%. And that's going to be if you're using market orders. But when you come over here to contract transaction, you can see that the fees change a little bit here. You can see the maker fee of 0.02%. So that's if you're placing those limit orders. And then you have a taker fee of 0.06% for using market orders. If you're curious about the withdrawal fees, you can come up here, give that a click. And here's where you can find the withdrawal fees that might be most relevant to you. Now, fees could be different by the time you're watching this video. I have seen different fees during different market conditions, so it's always worthwhile to come down, check out the fee schedule to see what the current fees are. And there you have it, your introduction to trading futures on the Bitget exchange. If you got some value out of this video, don't forget to leave a like and hit subscribe. And feel free to check out some other Bitget tutorials on my YouTube channel. Thanks so much for popping by and checking out this video. Looking forward to seeing you in the next one. And until I do, have yourself a powerful day.